Hi everyone. Thank you for joining even before the time actually started. This is Shobit from greytHR, and today we are going to be speaking about learning about a extremely important topic, especially given the time that we are in, only 3 weeks or 4 weeks before the tax filing deadline. What are the smartest ways to help your employees save taxes in 2025? Um, I'm joined here by extremely knowledgeable panelists, and I feel you will be getting a lot of value in this event. Now, before I go deep into any of the things, let me just show you or tell you uh, how will we proceed in this particular event. There are four major sections where you will be learning about the most crucial things that you need to know about filing taxes or helping your employees file taxes. Basically, we will be shedding light on the uh, old way of filing taxes, the previous one, old tax regime versus the new tax regime. We will also be talking about how to master taxes without hassle. Um, and then we dive deeper into the nuances. What are the new ITR rules and regulations that you should be aware about, and some common mistakes that you should be avoiding when filing for your taxes. Next slide, please. So I was mentioning that we have great panelists today, and this is what I meant. We have Sudhir Kaushik sir joining in, more than 3 decades of experience helping India and Indians filing taxes in the correct way. I have seen him on a lot of TV shows, so I'm a big fan. Welcome Sudhir sir for the event. Thank you so much for joining, and it would be a wonderful experience for all the attendees to get some of the information and the knowledge from him. So thank you so much, Sudhir sir, for joining. And Shashank, next slide, please. And we also have another special person from Taxspanner joining us. Say hi, Asta. Asta, again, more than a decade of experience. She will be helping us with the nitty gritty. She knows the details of all the ITR changes that have happened this year and what are the common mistakes people actually do. So she can tell you about those, and please note it down. We will also be sharing information, but she will be coming in and sharing very crucial pieces of information. So thank you so much, Asta, for joining, and it would be a lovely event uh, with the expertise of both Sudhir sir and Asta with us today. Next slide, please. Um, the way that you can ask us your questions, and whenever it comes to tax filing, there are a lot of questions. I mean, the question never end. So I would like you to look at the Q&A button right below in the navigation bar. Ask us your questions there. Our team is monitoring the Q&A chat, right? Ask us your questions. We will be able to give you answers to any tax related questions that you have. We also have a dedicated section right at the end of the event where we will be taking some of the questions live with Asta and Sudhir sir. So thank you. You know, ask us your questions. In fact, at greytHR, we are promoting you to ask more and more interesting questions. We will be selecting 5 lucky winners with the most interesting and engaging questions to our panelists and giving them Amazon gift cards. Also, Taxspanner is also rolling out an offer for the first 100 users who will be using their application. They have a very special discount running. So that's all about the offers and all about the way this information will be presented. And enough of me speaking. I think it's time for us to get to the masters, right? uh, so next slide, please. uh, I wanted to know how to stop losing money to taxes, and I really want to know what should I do for it, right? So I keep hearing about old tax regime, new tax regime. So these are, if you could really help me, I'm really, really confused and need help.
Thank you, Shobit, for the introduction and overall giving us the opportunity for the people, those who are interested in taxes. Taxes is generally a bore subject. People want to avoid tax and tax topics, but this is unavoidable. You have to deal with it and better you understand. So tax regime is the one new, I would say, kind of a game where everyone is trying to play, and it's rightfully, because everyone has right to use in their interest. The law says whichever regime is good for you. However, generally the people, or I would say the salaried, especially the young generation, they need a kind of a short-term solution or a easier solution instead of a well thought or a long-term solution. So both regime has their own benefits or their own shortcomings also. We would be sharing some kind of insights which we have drawn from the our experience in the past, because it's all about money. It's all about money. We are working hard to make money and get financial freedom. That's what we are trying to do. And that's where I would be getting the attention for all of us, those who are listening. Shashank, can we have the next slide? So everyone means everyone, Sudhir or Shobit or whosoever is joining here. We all have three objectives when we are earning in our working life, basically. So we want to build wealth. Everyone, whenever I ask, so they want to build some wealth. Then they want to be financially secure. In case I am not there, my family should be secure. In case my job is not there, my financial situation should be secure. Or in case I am medical dependent somewhere. So all these things are financially secure or a protected one. The third thing is, can I reduce my tax outgo? Yes, everyone has these three common goals, those who are earning throughout their working life, say 30 to 40 years, depending on their when they started and when they want to retire. Nowadays, it could be 20 years only, because people are looking for retirement at 40 or 45 also. So there could be difference, but in my age, we generally believe 30 to 40 years working. So it may be different for the younger people or those who are want to, that is also right. So these objectives keep in mind, because the next slide will continue on these three objective achievement. If you are agree, you can put yes or some thumbs up. These are your objectives. Then the next slide would help you to make more sense, and you can ask your queries also. You can put yes, 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 I am also agreeing on this. My objective is same. And this will give me some kind of motivation that I'm working on the right objective with the team, those who are listening to me. Okay. And the other thing which I would like you, that you are ready for change, because mindset is the bigger problem than the problem set in the market or the tax laws. So the mindset, keep yourself open till you are listening. Don't reject just outrightly. So the old tax regime, in my opinion, still helps you to save more taxes, to build more wealth, to make you more financially secure. In case of new tax regime, these deductions, which were kind of forced or disciplined, both words, forced and disciplined, they were available for the common man to take care of their retirement, to take care of their children education, to take care of their, I would say, house. Everything was ensured. However, new tax regime has given more money in your hand to manage your finances yourself without the burden of tax saving. So no, nothing bad. I'm not saying one scheme is better or bad, but looking at our financial knowledge and habits, still the old tax regime gives you overall more financial discipline and wealth also. So now old tax regime, which is giving for years, I would say a kind of a 50 years, we have been following the same kind of tax regime. This new tax regime has just started few years ago, and up to 12 lakh, up to 12 lakh is a big amount, because majority of the people are earning less than 1 lakh rupees per month. So they are by default coming out of tax law. So they need not to worry about any tax regime. They need not to talk, because they need not to follow any tax law. They are out with from the tax payment. Now they can choose for the financial planning. Shashank, can you put the next slide, please? So this is somewhere the overall, you can see yes or no. The cross means it is not allowed in new tax regime. So in old tax regime, we have 5 lakh rupees is the basic, up to which there is no tax. And in new tax regime, it is up to 12 lakh. So those who have below 12 lakh income, I would say be relaxed. need not to compare or need not to do anything. Just play your game and be happy. However, if you are crossing 12 lakh by margin, say 13 lakh, so then you should be very, very careful, because the 60,000 rupees, suddenly the tax will come up in your payment basically. So that needs to be planned if you are crossing that limit. And then the other thing is, if you have other income which have special rate of taxes, especially the short-term capital gains, if you are indulging in shares or equity or mutual fund and earning some kind of short term, then also new tax regime restrict that from this year. Earlier it was, there was an ambiguity. So that is also, if you are trading, please make sure that you are not incurring kind of or if you are trading in the market. The third thing which you need to see, if you are living in a rented house and you do not have your own house and you are going to pay HRA, because at lower income, HRA is a major tax saver, because if you do not have your own assets or wealth, you are living in rented house, then HRA is also allowed in old tax regime. And most means 99% pay slips. We have seen 20,000 corporate pay slips. HRA is one of the common, I would say, tax saver. And it's a genuine need of a person who has not built his or her own home, or if he or she is living in his parents' home, he or she can pay rent to their parents also. That is legal, allowed basically. So those people also needs to be careful. If you have limited income, please use this section and take the old tax regime. Then the LTA is not very kind of a common tax benefit which corporate allows. There are few corporates which allows as a part of CTC. There are not many corporates which allow. Our income tax law allowed this in old tax regime. So new tax regime doesn't have this. Meal allowance is allowed in old tax regime. However, if the cafeteria is there and the company is giving the coupon also to use in the cafeteria, then allowed in new tax regime also. That's a kind of a hidden benefit which people doesn't know, but this is allowed under the tax laws in new tax regime. Meal also. Then entertainment is a very small amount. Now the property or the interest on home loan, this is a significant amount, and I will be sharing a slide where you will see kar se ghar. Almost you can build 20 times of your CTC wealth after 20 years, that kind of, and putting only 10% of that money in that bucket. So itni badi wealth. So it's the biggest wealth you can create during your working years, which can help in your children education, marriage, and retirement, because it's an asset you are building with a discipline. We will be sharing in the next slides. So this needs to be careful, because if you have higher income, you can use the HRA benefit also by paying a higher rent and living in a very, very good house near your office. And then you can buy a house also and claiming the interest against the rental income. That's the way you can build bigger wealth, and that is not allowed in new tax regime. In new tax regime, you cannot have both. So that benefit and a wealth builder is also available in old tax regime. And I am following that. So you can just have a one kind of a endorsement that I'm myself doing this for years. So I have built some wealth through this. The other thing is section 80C. We generally, suppose you have children, those who are going to school, so you might be paying a good amount of tuition fee. So by default, you are saving or provident fund. So you need not to do anything for 80C. It is already full through these things. And if you're taking home loan, so nothing else. But if you are in new tax regime, you can't claim these expenses or these investments. So you have to see how I am using my money. Earning is one part. How I am going to spend or invest. If you have clarity or some kind of planning for next year or next few years, then the selection of regime is much better. Or I would say ideally for you. The other thing would be employer NPS. This is the beautiful thing which is available in both tax regime, and use it to the fullest. Use it to the fullest, because retirement is the biggest goal for everyone. We are going into singular families, and our age is going to be 70, 80, maybe somebody would be touching 90, 100 also. So we need money for retirement. Then medical expenses. So these deductions, please be careful. And those who are at the age of 50 or close to 50, their children might be going for higher education. They should use this section for education. They should take education loan, need not to withdraw from their provident fund or FDs, nothing. This is the best use of the income tax laws, because this deduction is unlimited. And again, this is available in old tax regime. So old is gold. So far, if you see, there are so many yes, 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 yes tick, which is available in old tax regime, and you can align this benefit with your age or your income also, at what age you are in and what income level you are in. So you can park your funds accordingly. So don't use your own money in children education. That's the, I would say, incorrect practice people follow. Shashank, we need to move next. So far, I think I have been able to make some sense, or you are getting some value for this 5-10 minutes. So please keep, I want people to be kind of energetic like me. You should also put some energy. So good enough. So if I'm not matching your mindset, so I should be challenging that also. So now we should see old tax regime turn your tax into wealth. So we call it tax to wealth, tax to wellness. So as soon as you start reducing your taxes, your wealth start getting built. That's the beauty of this old tax regime. It's not available for maybe after 2 years, 3 years, but it is available today. It is available for next year. So the government is giving you more opportunity. So don't lose this. So why choose the old tax regime? So I am trying to give you reasons. Practically, you should understand smart savers route. Those who wants to use their tax money also to be used in their wealth. Otherwise, you will be investing after tax payment. So the government doesn't give you any benefit directly for the payment of taxes in India. Abroad, there are some social security, etc. Hence, I say you will not get any direct benefit from your tax payments, even if you lose job or health or life. The government doesn't come back. You have paid so much tax, so your family will be protected. So if there is no direct benefit, I should use maximum taxes to be diverted to my wealth or my financial security, which were our 3 objectives from the very beginning. So those 3 objectives we are trying to continue. So this claim deductions by investing in PPF, ELSS, NPS, Homeland, all already discussed. So these help to build your wealth. Don't see that home loan is a burden. It's a wealth builder. You are monthly paying some amount like SIP in a mutual fund. And that real estate, jo asset hai, that can be used for your family in case of any emergency or funds required for education, retirement. You can sell that, you can get loan against that. There is a cheaper loan as compared to personal loan or other loans or credit card. So you can use a top-up loan, etc. So that asset always gives a strength to your overall financial security. And almost 50% of that EMI comes from rental and taxes from the very beginning. And after 5 years, 7 years, the 100% of EMI comes from the taxes and rental, because rental increases. However, the EMI remains same. Then the power of compounding, because the money you are started compounding from first year, in 30 years, it becomes 3,000 becomes 2 crore. I will share you the another slide where you will get the impact of small contribution every month you are doing. So 3,000 becomes 2 crore, that kind of a impact when you retire. So if somebody is paying 30,000 rupees per month tax, so they can have an opportunity of 20 crore. So don't look at it as small amount. Look at the year you have. Look at the overall opportunity you have, and then start building for 5%, 10%. Don't start or dreaming that everything you will do on a one day. If I start going gym tomorrow, I will not have a good body next day. So it will take some time to understand the concept, to take some action, and to build some wealth. So this is called power of compounding. It's a kind of atomic power. So then build future financial strength. Everything, whatever you are doing, so it will lead to children education or your retirement. These are the two very car or home or whatever we say, or a marriage. These are also financial goals, but retirement, you cannot compromise. You cannot keep on asking your children or parents or your neighbor, give me some money, I am retired. So you need money in your account. Similarly, your children education, you cannot compromise, in my opinion. So that's, even marriage expenses you can reduce, but everyone wants to give the best education, maybe foreign 1 crore, 2 crore people are paying actually. So how to build that asset? So those things, I think we have to inculcate in our day-to-day or month-to-month expenses and savings. ULIP is a very good way. Those who have 10, 12 years or 15 years for their children higher education, they can start building through ULIP. That comes under ATC, and that helps also but that is allowed under old tax regime. Okay, so and the returns are tax free. And in case something happens to us, those who are earning and contributing in ULIP, even then the money comes in the children account when they get majority age and they want to pay the fees. That kind of policies are available in the market. Financial discipline booster. Since you are investing every month or every quarter, that also gives you kind of a ready for the what can I say, for bigger amount you are contributing on a smaller pocket. That's a SIP, and it's a disciplined investment because your salary is on a monthly basis. So you should start investing on a monthly basis. Don't keep, I will buy a house after 5 years when I have this much money. These dream home remains in dream only. So buy the real home from the money you have in hand. Proof needed. Yes, there is a problem. For old tax regime, you need to continue more and more documentation proof for the claiming these deduction, and the department can also ask. This is the only thing. And at the bottom, you can see 1.5 lakh annually making you 28 lakhs. So that kind of compounding again and again, you should remain this, because this concept is the bigger thing, because we are working for 30, 40 years. So next slide, Shashank, please. Any query, please keep asking in the chat box. Also, you can ask at the later stage also. I think you missed one slide, Shashank. Yes. No. Yes, this. So new tax regime, zero proofs. Basically, employer contribution is allowed, which is employer is deducting and they have all the necessary proof. So you need not to collect or submit any proof. So this is kind of a, there is no burden at your end, and you are getting the tax benefit also of a lower tax also. So simplicity meets saving. The more disciplined disposable income, if somebody is not well in your family and you need cash in hand more, there are real cases, use cases when people want to save but they can't save because there are dependents in their family. Mother is not well, father is not well, they need money, cash in their hands to pay the medical bills. So in that case, new regime helps. Those who wants to go abroad need not to save here money, their plan is for long term. So even then, I would recommend new tax regime. Those who have income 12 lakh or 12.5 lakh, below than that, new tax regime. No kind of a math required. Then the time saver is also there. You need not to submit proof. You need not to think about filing. You just go on the income tax portal. There is a kind of no assistance you require for filing also. So it's very simple. Ideal for young earners, as I mentioned, they can spend more money if they want. Risk of inaction. Yes, there is a risk that they don't plan for their financial future, because they are making their today good, but tomorrow riskier. It could be better, but there is a risk. Tomorrow their job is not very good, or the inflation is very high and they are not able to save money, or these offers are not available. So I would say, and suppose they are not even taking the medical cover and they lose the job and something happens, there is very big risk, because today, at least for 80D, they are getting medical, preventive health checkup, etc., just to complete that section. But that's a necessary thing. So don't avoid those protection from your overall life, financial life. Okay. So even if you go to the new tax regime, don't take the risk of not getting insured for your health or your life. Short-term planning, yes, if somebody has long-term outside India or somewhere else, people wants to go Dubai or US or UK, so they can also have a short-term plan. There is no compulsion of deductions. So we can move on the next slide. So this is a calculation where you can see the same CTC 25 lakh for the both regime we have taken, and we are taking the 2 lakh rupees home loan interest deduction, which is adjusted through salary income in old tax regime, whereas it is not allowed in new tax regime. This is a major loss those who wants to build wealth, because every year this will happen. Okay. Similarly, the education loan interest, it is allowed under old tax regime. So those who are in the age group of 40, 50 or plus, they also be earning higher income also as compared to young generation. So I suppose they need to take care of their expenses and their financial responsibilities. And if you see, the overall gain is 37,000 per annum. That means around 3,000 per month. So I have taken this example willfully or kind of just to give you an example. In the next sheet, Shashank, can you move? So you see 3,000 rupees becoming 1 crore 94 lakh 73,000 in 30 years. This is only at the rate of 10%, and market is giving 15%, 20% if you keep your investment right. So this is the TDS in your payslip. Basically, you can check how much TDS, 3,000, 5,000, 10,000 per month I am paying. So I am losing 6 crore 50 lakh if my TDS is 10,000 per month in 30 years. So you might already lost, suppose 15 years. So still you have 15 years. So whatever you have in hand, just compound that. This compounding sheet should be, I would say, you should have this in your mind or in your dashboard. Oh yeah, this should give you pain. Oh yeah, itna loss. I should have a golden retirement. Let me check again. And as I mentioned, it will take time to understand and to take action, to change your mindset. This number is on Excel sheet. Anyone can challenge, anyone can give me a call, sir, this is not correct, and this is real number. So no photograph or nothing, marketing gimmick, but I want to give you a real impact that this is the, how you say after 60 years, I don't have money. Yeah, I worked so hard, but paisa kahan gaya? So paisa idhar gaya. So just make this sheet in your mind. So hope you are getting some kind of a buzz in your mind. Kuch to karna padega. You must be thinking, I need to do. Shobit is also thinking, I will do something.
Yes, sir.
Sure.
In fact, sir, I have a plan
Yeah.
where there's so much knowledge being imparted in the last few slides. I was thinking maybe we should do a little poll for our audience members. Shashank, if you go to the next slide,
Sure.
please,
Sure.
where I have a question that sir just talked about. It'll be on your screen right now. Uh, if you can see it, the question is very simple. Which tax regime generally offers numerous tax deductions and exemptions, encouraging investments like PPF, ELSS, and NPS to reduce taxable income? At the age of 60, if you don't want to use the word, where did my money go? Mera paisa kahan chala gaya? Which tax regime are you going to be selecting? You have four different options: old tax regime, new tax regime, both regimes equally, or neither regime. So I think, sir, based on the responses to the like to the poll, I think the audience is really in tune with what you're saying. The correct answer is old tax regime, and most of the people have responded like that. So I'll end the poll now. And sir, I had one more question. I keep asking you questions, or I'll keep ask one more. So
Yeah.
there are so many regulations. We just went through like 4, 5. Screens where there was so much information there. And by the way, a note for the audience members: both the recording of the event and the slides that the sir is talking from they will be shared to your email ID that you've registered for this event. So you don't need to worry about, hey, I will forget some detail or anything like that. It'll be in your hands in the coming few days once the event is over. And now back to my question, sir, because I'm a very curious person. With so many regulations, what are the simpler or lesser known ways to save on taxes? I keep looking at all these Instagram reels and YouTube shorts, and these masters and these experts keep saying, hey, you're missing out one thing, other thing. Can you just tell
Hmm.
me and the
Yeah.
audience member simpler sort of things to know?
Yeah, so tax is complex, the first word I would say. However, we all try to make it simpler, and we have to give some time and attention. That's not very difficult. I have been easier for the audience also, those who are listening to me. Shashank, can you help me with the right slide? How they can master in each of their part of this mastering taxes without hassle. So how to master it? So the next slide will help you to take each event. Event means live event. I will just share that on the screen, Shashank. So this is something I would say less hassle or without any hassle. You just can see house. When you think of your house, you are in job. So the first thing, tax lapses means you are living in your home. That's a mistake. Expert suggestion is rented home because HRA can be claimed and you can have a wealth builder through buying a new house and giving it on rent. So that kind of wealth builder plus claiming HRA, that's the right combination for those who are working on salaries, because apna makan, which generally people, I want to live in my own home, that should be emotional, and emotion has to be cut. While you want to build wealth as the first objective, so simultaneously you can't live both words. You have to just correct your emotions, because the apna home or own house, whatever you are saying, it's 80% bank home, by the way, when you are buying through bank loan. So just come out of that emotion and calculate the money and love your money. Love your money which is going into the taxes, then only you can save. मैं नहीं जाने दूंगा मोदी जी के पास. I will not give more money to Modi ji. They are getting richer and richer. So we are not the political party. नहीं तो हम बोलेंगे अदानी जी को दोगे, किसी और को दोगे. But we are saying हम मोदी जी को ही नहीं देना चाहते, हम तो अपने घर को देंगे. We will give this money to our family because this is rightfully available for our family. We are earning for our family, and house is nothing which is the best asset we can give to our family, our children. So a bigger house should be taken because 30-40% coming from taxes. Otherwise, it will go into tax. So we should give a good house during our working life. And I use this statement generally: increment should be in life, not in payslip only. Every year we are getting increment, but that increment is not helping my family. They are living in for 10 years, 20 years in the same house. So what the hell I am doing? But HRA helps me because I have to take a better house. And that's the way to use money. Earning is one part. It's not the complete you are doing. You are mistaken. You have to use this money wisely so that less tax goes to the government and more wealth for my family. So this is bigger one. So, and continue build this wealth. In 5 to 6 years, everyone gets a kind of a double income. Suppose your income is 20 lakh today. You can go back and see my income was around 10 lakh before 5-6 years. If your income is 40 lakh, you can see my income was around 20 lakh. These are the averages we have got insight from our database of 20 lakh plus tax filing we have done so far. So my point is, these numbers are really impactful and guiding. After 5 years, you should sell this house, which is on rent, and buy a bigger house because your EMI capacity is bigger now. So keep on doing this process for 5-6 times during this working life. You will not believe that this is going to be a crore and crore and crores, because the compounding is happening every 5-6 years. So the next question comes the car. Car, again, people do buy from their tax paid money, which is 30 or 40% less after surcharge, etc. So if you are buying a 20 lakh car, So already 10 lakh rupees paid in the taxes minimum. Then only 20 lakh comes in your account. The TDS has to be deducted by the employer. But if you take the company car lease, if your employer gives, and if the HR people are here, I would say use this option for yourself also, not for the employees, because you are also paying taxes. So if a good policy is there, so you and all the CXOs all get benefit of this because they have the higher income. You can buy a car of rupees crore also, you can buy more than that. There is no limit, and it is super tax saver because the driver salary, you are giving job to someone, and this country needs job. Otherwise he will be cutting pockets, etc. Somewhere some dirty things. So my point is hire a driver also, so that you encourage a job also, and the fuel, maintenance, insurance, everything is pre-tax, so you are getting 30-40% cheaper. So this car lease concept, those who have difficulty in understanding, come again, because this is sometimes a bigger tax saver after house. So our need are also as per need. House is the first and the bigger need, then the car, then travel. So as I mentioned, you can choose like this. If LT option is there, if not there, request your HRA, sir, why can't we have this component in, if income tax law gives? So please, whatever the people, 5%, 10%, those who wants to use, because those who are below 12 lakh or 15 lakh, they might not be impacted. But those who are in the higher bracket, 15 lakh plus, they should be supported with the good salary structure, flexible and tax efficient. And we do help them also. Then the restaurant and grocery, we go for discount coupon. The government giving you 30% discount through meal coupon. Use this. 30% is not a small amount. 11,000 rupees plus every year you are getting from the government. Otherwise, Modi ji will enjoy. Then the tuition fee, again, if you are paying available under ATC, you can stop, defer the LIC, etc. if you are taking new regime, because policies are not good. Those, I would say, before 10 years, if you have taken, their returns are not good, their risk cover is not good. Insurance has become more competitive now. So you can check the latest policies and your requirement. Need not to continue. Life and wife can be continued. Policies needs to be checked. Okay. Then higher education. Yes, ULIP, as I mentioned, ULIP is good for your children education, how to accumulate money during their growing years. So retirement, already mentioned. So NPS in both situation, medical, in old regime. Next slide. Shashank, please help. So this is the Kar Se Ghar, which I was telling you. If you see 1 crore house is getting 6 crore 72 lakh in 20 years. And we have taken 10% appreciation, which is an average. So the person who has 33 lakh kind of income, we recommend 3 times of your CTC. If joint income is there, husband and wife both are working, combine those income and multiply with 3. That's the recommended value of this house. Need not to buy 4 times or 2 times. Like a doctor gives you prescription, follow this. It will not stretch you too much in EMI. It will not keep let you down in terms of building wealth. Whatever the wealth you can build, with follow this, and take 80% loan to the longest tenure. Need not to prepay. These are the free few kind of a necessary thing to build wealth. If you are going to prepay, you are losing, because you will not get the benefit. If you are buying under construction, you are not benefited. Buy ready house which can be rented. So this kind of wealth builder, if somebody needs more information, you can connect us later on also for the interest of all these. We need to cover the other section also, but this is a tried and tested method with logic with magic. It looks like a magic, because 30 lakh salary and 6.7 crore. So as I mentioned, 20 years में 20 times of your CTC, you can build wealth. So this logic and magic is available again in numbers. Next slide. So this is the car lease example. There's a 14 lakh car, which we taken the example for Honda Creta. so Hyundai Creta. So 7,24,000 is the total benefit for fuel and car cost we have taken, right? And the highest bracket, it is coming to 7.24 lakh in the last column, and it could be lesser for the people, those who are below 50 lakh, or because the surcharge rate is different. So these numbers can be challenged. You can save these numbers. You can ask further queries later on also. But trust me that I am following the Karsigar also. I am following this car lease also. I myself is taking benefit just to ensure that सिर्फ बताने के लिए नहीं है. I am using those options. Sometimes होता ना सर रामदेव बाबा खुद क्या खाते हैं, तो औरों को तो लोकी और सब कुछ he wants के people should get सात्विक भोजन, but does yes I do follow all these whatever I am suggesting. Okay, next slide, Shashank. So NPS, as earlier mentioned, just believe me, this has given a good return over the years, especially in last 4-5 years, 16-17%, whereas PF is giving 8% plus. So double, almost close to double returns NPS is giving. This is over and above 80C limit if you are in old tax regime. And this is also giving you the most important financial goal, which is retirement. If you want your golden years to be actually golden, then follow this. And this is a kind of an equity diversification also, because the NPS is going in the equity. For new tax regime, it allows 14%. So follow that 14%. Don't be conjuice for your retirement. It is for yourself. Sometimes I feel I get query, sir, I can contribute 5%. भैया किसी और को नहीं देना है. This is for you when you would not be earning. So please contribute fully. Okay. So these are the, I think, the best slides or the best tax savers, and smaller things can be discussed in a separate section. We are in the tax filing season or the time. Everyone should look for the tax filing also. They should complete as soon as possible, and we can move in the next direction. Hope I have been helpful and useful. Thank you, Shashank.
Thank you, sir. Thank you, sir.
Yeah.
I think really valuable information, Shashank, for the next slide. One more thing, I think, sir, people have been asking questions and responding as well. Just to test out the audience, how closely were they listening to you in this section as well? We have a poll question. Which one of these is a key feature of the National Pension Scheme, NPS? Sir just covered it. We have 4 options. It is a short-term investment for immediate returns. Second option, it offers professional investment management. Third option, it is exclusively for government employees. And the fourth and last option is it has high fund management fee. Sir, again, early signs. More than 98% people are fully in tune with what you've shared, right? For people who still haven't answered, the correct answer is it offers professional investment management and tax benefits in both the previous and the new regime, right? So that's it for this poll question. And Shashank, if you could go to the next section, the slide for that particular section. I actually have a question for Astha.
Yes, sure.
Yeah. So Astha, I think I kept reading some news bits of information on newspaper and in TV. There have been a lot of updates when it comes to ITR. What should we know about it?
Absolutely, Shobit. Now, because see, we have covered the regime selection because that has been a major concern for every one of them, because that only does not only impacts the taxes, but also your ability to create your financial planning that aligns with your financial goals. But every year there changes keeps on coming. If we do not comply with that, we will lose that money that we have planned for the year. So we need to be aware and have to be compliant for that purpose. So I'll tell you how small oversights in this financial planning and even just missing filing the ITR could cost you more than you think. So in the slide, so for this year, when the ITR filing has started, so there has been major changes in the forms also. If you miss them, if you do not comply with them, whatever the efforts you have made for during the financial year, you lose those benefits. So now to start with, so the basic thing, if you, for the taxpayers, for the small investors, if they have some long-term capital gain up to 1.25 lakh rupees in a year, so they can choose to file ITR 1 and ITR 4. So in the earlier years, they were required to file ITR 2. So this will make them easier, because ITR 2 was a bigger form and a longer form with all the information. So you can do that. And then the major thing is the mandatory disclosure of the exemptions that you have claimed. So starting this year, you are required to give a detailed reporting of what all exemptions you have claimed. Even if it is there in the form 16, you have provided all the proofs to your employer, still you are required to provide the details of with regards to the maybe the policy number, the UAN number for the PPF account, and an EPF contribution, right? So all these details are required. So if you have any medical insurance, you can go to the second slide, next slide, Shashank. I'll show you the screenshots that I've taken, the actual. So HRA is the major thing many of us claim under the old tax regime, right? So for those who have switched the job in the last year, they are required to provide, the correct details of the basic salary, the HRA they have received from both the employers and the rent. Then only you will come up with the actual HRA exemption. So there would be some differences in both the form 16s that you are having and the ITR that you are preparing. So it will require for you to be more clever and to be more particular about the things that you are mentioning in the ITR to claim that, right? So whatever, not to lose your exemptions, you have to maintain that. And next slide. So similarly for section 80D, the medical insurance, many of us take that, right? So unlike in the previous years, now you are required to give the policy number, the amounts, the name of the insurer. Now why this department is taking all these information is just to grab and take the fake deductions which people were claiming, the taxpayers were claiming in the previous years, right? So to track that and to check that, they are requiring all these informations to be maintained and to be declared in the ITR. And now many of them face challenges that they have already given it the form 16 to their employer. We do not have those details, so they will lose that. Okay, they lose the benefit even if it is there in the form 16. So that is the extra effort that the taxpayers must now make it. Next slide. Okay, so this year a separate reporting of the transactions for the capital gains. Nowadays, every one of us is trading into shares or the mutual fund. So we are required a separate disclosure, reporting of the long-term capital gain or the short-term capital gain made on or before 23rd of July. So that was the date when the final budget came last year. So this is why we need to make it, because the rates got revised after that date. So to have a proper disclosure, to file the correct taxes, it is required to separately segregate that and disclose in the ITR. Otherwise, the thing that is going to happen is that we'll receive a notice, either we'll end up paying more of the taxes or the lesser taxes. Ultimately, then we have to deal with the department for the notices that we receive. And to grab this fake deductions which the taxpayers were claiming in the previous years, just providing all the, just see, this is a real example wherein the employee, the taxpayer in the last year has claimed other salary exempt income. Okay, so now the person won't be able to claim in such a way, because for the exempt income, you are required to give proper details, the policy number, or for HRA, all the details. So no such claims can be made. And whatever, because people who have made these fake deductions, you were saying something. So for those who have claimed such fake deductions are receiving notices, right? The penalty and all the extra taxes that they are required to pay for that matter. The good thing that the government has done, they have extended the dates for updating your ITR. So one is the due date wherein you need to file the ITR, then is the belated return date wherein after the due date you can still file the ITR by paying some penalty. But now you have the option to rectify your previous year's ITRs by paying the additional taxes, so that at least you do not receive a notice. Okay, so because the government still thinks that the giving the taxpayers the first choice to correct and to declare whatever the income they are having. So we need to have this compliance and these changes, comply with these changes.
This is, I think, information that will be of relief to a lot of people, the ability to correct their past mistakes in terms of ITR filing. And this has been a great sort of a reminder that there have been so many new regulations that has come out. I have a feeling that I will be in safer hands under an expert, right? Somebody from Taxspanner if I go file versus going on like, any other platform. So Asa, thank you for that information. Again, like a question that I asked Sudhir sir, I'll also ask you. Simpler sort of thing that I can remember while filing taxes or for the audience members is if they can avoid certain common mistakes that people usually make while filing taxes. If you could talk about that.
Very good question, Shobit, because I have come up with, even in the chat, I could see those questions which was popping up, that whether I can change the regime every year, whether the capital gains needs to be considered while checking that limit of 12 lakh rupees and so on. So the very main thing, not only for filing the ITR, but also during the year while selecting the regime, is to consider your overall income. The biggest mistake that we see the taxpayer do is just checking the regime on the salary income. And when they file the ITR, they end up paying extra taxes, additional taxes, because they have all the other income also. Maybe the saving bank interest, the capital gains that they have, the dividend income. Shashank, if you could just go to the next slide, I'll show you what are the most common mistakes that people do. So first, mandatory filing of ITR. So people do not know, they think that, I asked the audience that what do you think if your CTC, the total income is up to 12 lakh rupees and no tax liability is there under new tax regime, right? No TDS is getting deducted. So is it mandatory for you to file ITR? Many of them say, no, it's not mandatory because I do not have any tax liability. No taxes are getting deducted. But no, if your income exceeds basic exemption limit, which is 2.5 lakh under the old tax regime and 3 lakh if about the financial year 24-25, 3 lakh for the new tax regime. So if it exceeds that limit, you are mandatorily required to file the ITR. So you need to comply with it and file the ITR. And yes, while filing ITR, you can again switch the regime. For salaried person, they have liberty to switch the regime every year. So whatever the regime you may have selected with your employer, or you may have just not selected any regime because of ignorance and all. So you can switch the regime at the time of filing ITR by considering and recalculating your taxes, considering all the income that you are having. And remember to file within the due date, because you will not only going to pay the penalty after the due date, it is also that you will have to mandatorily file under the new tax regime. So even if you have selected under the old tax regime, you will have to mandatorily file under the new tax regime and you will have to pay the taxes. There's no scope and no escape from that. And if you have filed within the due date and you have not e-verification, the ITR filing is complete only once you have e-verified the ITR. If you do not e-verify within the time limit, that is 30 days, again your ITR filing will become invalid and you will have to again file under the new tax regime. So these are the most common mistakes. We see people are paying a hefty amount only because of this ignorance. We do not make such a mistake. And then while filing the ITR, just need to compare and match your income with the AIS, the annual information statement, which is there in the income tax portal. Many of them do not know they have a dividend income arising, right? They do not declare, they do not see their bank account, they do not know that yes, these mutual funds has been redeemed. Because some broker is doing it on their part. So this needs to be matched, because if you are missing that income, again, you will also pay the taxes, additional taxes at the time of filing ITR if you do not do it and regularly check during the year, because you need, if you have any other income apart from your salary, the taxes are being taken care by the employer on the salary income. But for all the other income apart from salary, you yourself have to get the advance tax calculated and see if there's anything can be done to save the taxes for those other income. And then the, yes, self medication, I have seen the biggest problem. We know that yes, this is a medicine I can take for my headache. Okay, we can just see the last prescription, the doctor has prescribed certain things to my mother or my sister, brother, so I can take the same medicine. So same thing happens for the tax matter also, that my colleague has the same income, so everything is same, but why I'm paying additional taxes? Let's do some the same deductions and same planning. So this doesn't work. Every individual have different goals, different expenses, different their incomes. So this needs to be a tax expert, needs to be expertise needs to be there in their planning, in their taxes, to have a better financial planning and a better wealth that can be created for future. Okay, and then the disclosure, it's not only that we need to declare the income in the ITR, it is also a disclosure of certain assets that we are having, be it foreign assets, or if our income exceeds a certain limit, the asset and liability also needs to be declared, even if we are not deriving any income out of it. So these are the common mistakes. If we miss in the ITR, again, we are going to have that notice from the department, and by having everything in line, then also we need to just comply, and we need to might end up paying the penalties and taxes to the department. This reminds me, Shobit, one of the case wherein the taxpayer, the person just ignored or missed filing the ITR during this pandemic, and he had got this notice, and the department considered it as escaping income, because that taxpayer only filed the ITR once he received the notice from the department. So even since he was having all the salary income, all the taxes were duly paid by the employer, and nothing was pending, nothing was additionally paid, the only in the form of penalty, he had to pay a good amount, a sufficient amount to the department. So these are the mistakes that one should definitely avoid. And not only these, but also who need to file the ITR. Once you start filing, what all things you need to have it with you. So if you go to the next slide, Shashank. So yes, if you are filing it for the first time, because many of are the maybe the newly joined people who have just started working, so they must be registered on the income tax portal. And for those who have switched the job last year, both forms, all the form 16 from all the employers needs to be there. The bank account details, because you cannot proceed filing unless you have a validated bank account in the portal. So you have to have that. In case you have a refund, that will go away, that will not come to a correct account if the details are not correct. So these are the many small things. And yes, now starting this year, all the loan statements, the account and the details, the loan account number, the policy account number, all these details, the exemptions that you have claimed to employer has to be readily available, because we do not have that much of time left. Even the extended time limit is approaching, which is 15th of September. Next slide, Shashank. So this is now, I believe, after all these discussions and explanations by Sudhir sir and whatever I have just given the information on, you must be aware that who all are required to file the ITR. So if you have income which is above 2.5 lakh or 3 lakh, you are mandatorily required to file the ITR. Do not miss it, because sometimes happen. Look at not only yours, you also check it for your parents. They may be having some fixed deposits on which taxes are getting, TDS gets deducted. You can still file their ITR and claim that as a refund. So it's not only limited to yours, but you also see on your family members. Then the foreign income, many of them has these foreign assets from the company. They may have not sold it, but since even if they are holding it, they are to be declared and needs to be filed. So these are some things. And why it is important, because if you go for any of the loan or any such matter to the ITR forms are the basic requirement and the basic documentation which every organization asks, right? To even if you go for any credibility, it acts as a credit worthiness for you, right? So this is something which is really important and should not be missed. To carry forward the losses, to avoid penalties are just small things now. So everyone knows and should be aware. But the thing is only that you need to be aware and should act in such a way and should not ignore and pay the taxes. Or the
I think, Asa, I'll just take your advice straight away. I think I got covered in the section in the previous slide, the self-medication. I love to ask my relatives how they do it, right? So I think new and new things, all these regulations, how to make it actionable, right? Is there a easy way where I can possibly make all of this information actionable that you can tell us?
oh, it's the voice.
Yeah, Shashank, if you can hear me, you're on mute.
Sorry, there was a disturbance. Sorry, Shobit.
No problem.
Yeah.
So basically, I was just saying that all of this information, how do I make use of it? It's pretty good.
Yeah, thank you, Shobit. So I'll quickly take you through the process of using Taxspanner on greytHR to file your taxes, right? So I'll be taking you through two different processes. One is as a HR admin, how easily you can enable Taxspanner to your employees, and how as an employee you can use it on greytHR, right? Let me share my screen. Just give me 1 second. Hope my screen is visible.
Yes.
Yeah. Now, as I mentioned earlier, so I'll be logging in as HR admin first, so that I can show you how to enable as a admin to your employees, right? So I've logged in as an admin to my HR admin portal on greytHR, right? On the HR admin homepage, I'll be able to access Unite Marketplace from the 9 dotted menu. So a Unite Marketplace is where the integrations are available on greytHR, right? On clicking Unite Marketplace, I'll be redirected to our marketplace landing page, where you'll be able to see all the integrations that greytHR has. Under that, you can search for tax category and click on it. You'll be able to find Taxspanner under that. You just need to click on view details, right? Where you'll get an option to get started. That is nothing but enable this to your employees. As you can see here, your details will be pre-filled. You need not do anything manually, right? You just need to agree to the terms and accept and proceed, right? That's how simple it is to enable Taxspanner to your employees. And just like that, all of your employees in your organization will be able to access it, right? Now, yeah, this so you'll be able to track how many number of employees started filing, how many enabled. All these tracking mechanisms are built in. Right now, let me quickly log in as an employee to show how employee interacts with Taxspanner on greytHR. So now I've logged in as an employee who's using greytHR ESS portal. Just give it a second to load. Yeah. So here in the navigation menu, you'll be able to find Unite Marketplace, right? Under that, you'll be able to find all the applications that your admin has enabled. And one of them is Taxspanner. My admin has enabled Taxspanner for me, right? I just need to click view details similar to what the admin did. I just need to click enable here, right? Here, the only permission or only data that will be shared with the vendor is Form 16, because we have built a feature called Auto Fetch Form 16, where I can show you right away, right? So instead of the previous way of doing it, where you need to download the Form 16, upload it into a different platform, so we have completely eliminated the process of going out of greytHR, right? Just by click of one CTA called auto fetch Form 16, your Form 16 will be automatically fetched onto Taxspanner, right? Similar to that, you can just proceed here. I'd like to show one more way that you can approach this. It's even simpler, which we have recently introduced. It's a even further automated way of filing your taxes. In ESS portal, we have something called as Document Center, where we have the Form 16. If your organization has released Form 16, this is where you'll be able to find it. And on the Form 16 page, directly you'll be able to see this widget, which says for this year, you can just proceed with tax filing, right? One click and a Taxspanner will appear here, and you can just click proceed, right? Automatically, your Form 16 will be fetched. It will be analyzed, and you will be directly appearing, or you'll be landed onto Taxspanner page with your Form 16 readily analyzed by them, right? So this is how simple it is. This is a dummy Form 16. That's why you're not able to see actual numbers. But this is how simple filing ITR with greytHR and Taxspanner, right? So over to you, Shobit.
Thank you so much, Shashank. I think one point that I wanted to reinforce is if you're an HR admin who's a customer of greytHR, enabling Taxspanner does not cost you any money, right? All you're doing is basically enabling your employees a direct, a secure, and a convenient method to access an application which can help them file taxes in a reliable, timely, and safe way, right? Apart from all the other benefits of getting more returns on taxes, paying less taxes, and doing more with the money that Sudhir sir kept mentioning, right? So that is the essential nature of our integration with Taxspanner. It does not cost the company any money or anything. They just have to enable, click on one simple button, and just inform the employees that you can also use the service. So that is what I wanted to say. Thank you so much, Shashank. I think I will be making use of this myself, right? There is a special discount happening right now for first 100 users. There's a coupon code which we have already shared, 40% off on tax filing fee, right? So I encourage everybody to, if you're an admin, enable the application, tell your employees. If you're an employee joining the session, ask your HR admin to enable the application for you. Highly, highly recommended, right? And that brings us to the Q&A section of our event. I think both Sudhir sir and Aastha is here for all the questions. I think more than 60 questions have already been answered. So that tells us that people always have questions on ITR, income tax filing, and they're always curious as well. So I'll start off with certain basics, right? Maybe like a refresher of what Sudhir sir or Aastha already talked about. Things like FBP and LTA. Although they have been answered, Sudhir sir, if you could just maybe in a two-liner kind of describe the benefit of FBP and LTA, and if people had to make use of it, what could they do?
LTA, you said? LTA
Yes, LTA and FPB.
Flexi benefits.
Yes.
Yes. So flexi benefit will depend on the company policy, what kind of benefits they have taken for the employees. And sometimes it could be selected employees. Suppose car lease is for a special band or a higher band also. It happens generally in the company policy. So flexi benefit, I would say, entirely dependent on the corporate policy, which is available differently. But it helps in new tax regime also, because there is a kind of a ambiguity that new tax regime doesn't have any benefit. Those expenses which are being incurred for official duties, suppose I am using a laptop or a mobile phone for my official duties, so I can buy that and I can save taxes in new regime also. So that kind of flexi benefit can be given by corporate. Employee cannot take themselves. So those who are from HR, they can give this benefit in new tax regime also. And similarly, the meal, as I mentioned during my session also, meal if in the cafeteria is allowed, that is also allowed. Old tax regime, 50 rupees per meal, that means 100 rupees generally. So 2200 rupees are being given. So that's most common. And 5000 rupees gift, which is allowed. And gift and meal are, you need not to keep any document as a corporate. Sometimes people do think it's compliance heavy or it could be, no, there is no issue, especially if you are getting digitized through any Zaggle or other companies. So that also helps you to make your kind of a work less hectic, because and there is a good chance that you are not losing in terms of tax evasion, because the employee is spending on a particular uh, fuel or food, then the wallet gets deducted from that money. So the tracking of that expenses which is actually being used for the same. So employer, as an employer, HR or finance head, you have more clarity, more visibility of the employee expenses or using those flexi benefits. And you can track on monthly basis. You can have this data digitally available for years to do the compliance also. So beauty is, and Modi ji says na, digital India. So digital India means you are also digital, and great HR, everything, it can be seamlessly connected with your HRMS, great or whatever you are using. So the other thing is flexi benefit has more than 10 kind of benefits which are available. So books and periodicals, if you list down health and wellness, as we were mentioning, health and wellness can be given over and above CTC. There are very, very good MNCs. They are using this for new tax regime also, because there is no choice. Because if you are giving over and above CTC, over and above CTC means I have to give a specific amount. Suppose 10,000 per employee, to each and every employee the same amount, and same vendor has to be given. Suppose Taxspanner or some other medical test, the curation has to be given by the employer, HR. They need to have a platform where the employee can use those services against these points. So these plans are very, very well, I would say, in terms of employee benefit. The latest one after COVID, people wanted some kind of people were depressed or some kind of a stress in terms of financial also. Those who lost the job, they were not getting some kind of support from family also, or their businesses were, or their job were not working. So this financial wellness also get embedded with the overall wellness, where health was the prime. Now health includes financial wellness also. So those who wants to know more, they can definitely connect us. So flexi benefit helps around 30% of their CTC to go into the flexi benefit. Like car lease, as I mentioned, is a bigger one. For those especially in the higher bracket, sometimes surcharge can be avoided using this, and surcharge is 10%, 15% is a big amount because the tax is already there. So we should give those options. Then the other thing which you said, LTA. LTA, in case of LTA, when you design your salary flexible benefit, you can give that option up to say 50,000 or 1 lakh rupees. You can, and use the word up to, because some employees might have a single family, double family, or 4 member of family. So they can use accordingly, because everyone is not using 1 lakh rupees or 20. So law doesn't say that you give same amount to everybody. Similarly, HRA, we call it a flexi benefit. Don't put a fixed number, give up to 50%. As per their requirement, they can have 0, they can have 40%. So in my opinion, income tax law doesn't restrict you to get kind of a fixed amount. They say give that flexibility up to 50% of basic. So using up to word in your policy, in your salary structure, that also helps employees to restructure their salary, and we are very helpful to them also. If the structure is very rigid, then we cannot help. Well, we can help in a limited sense. So for
Understood.
Yes. So
Understood.
these are the things. And LTA is one beautiful thing. Then when we have family together and we are traveling, what else you want? The government is giving you 1/3 of that. So that's the beauty.
Sir, the next question is very different from this family with traveling with family image, a happy sort of an image. Imagine somebody is getting a notice like Astha was talking about, right? Like they've just received a notice from the department I think anybody would get stressed if they receive any sort of a notice like this. And maybe, they made a wrong choice when filing for old regime or some sort of a refund, right? At a generic level, they did something wrong and they got a notice, right? What do they do in this scenario? There's been some information floating around that could they go to ITRU? I'm not aware of it completely. So just an understanding around how do they tackle this sort of unpleasant, yeah, if Asta can answer it.
See, first of all, depends that what kind of notice the person has received. Is there something that he has not declared any, he missed declaring any income in the ITR, which the department has now checked and has given the notice, has found the discrepancy, or whether is there any exemption which was, the department thinks it is a fake deduction that since you have not claimed through the employer, because there are many allowances and perquisites that needs to be declared and to be claimed only by through the employer. You cannot claim it in the ITR, like leave travel allowance. You cannot claim it in the ITR, even if you have the proper bills and everything with you, or the books, periodicals, or any of the allowances, which the only HRA is something that you can claim, right? So it depends that what is the source of income, what is actually the discrepancies the department has identified and has raised the demand notice for. So only because I mentioned that only not filing an ITR and having paid all the taxes can also attract a notice, and you have to deal with it. So ITRU is only for those people who have not declared any income, they have misdeclared any income, or they have just not they claimed any exemption mistakenly, or they have claimed a fake deduction being for whatsoever thinking they were having at that point of time. So they can correct it and they can file the ITRU and correct their ITR, not to have such kind of a notice.
Understood. Thank you for that answer, Asta. Sort of a recurring theme of questions has been around the information. I think whenever there's any topic on tax filing, there's a reason why there are experts and then there are people like us who file and we ask these questions. The information is very vast. In the entire session, a lot of new information you might have noticed or heard about for the first time. So to ensure that you are able to retain this information and make use of this information, after the event is over, we will not only share the recording of the event that you can go to a specific section, but whatever you are seeing on your screen, it will come to you as a PDF. So you can handily take note of it and see that particular information. And in order to make all of this information actionable, we recommend you checking out the Taxspanner app available in the greytHR marketplace, right? I think in interest of time, probably the last question I'll pick up. We are beyond our time by at least a comfortable 17-minute stretch. So thank you so much. I think everybody, not only the audience, but all the panelists as well, sticking with us. Let me see if I can find an interesting question. Priyank Patel, this has already been answered, but I'll take it up again. What are the ways to save taxes on capital gains? Asta was saying everybody does, mutual funds and stocks these days. So capital gains either from shares or property or mutual funds, other than just paying the full tax.
Capital gain from equity, the listed one, if you distribute among the family member up to 1.25 lakh, everyone can save legally and authentically. There is no harm doing that. We call it gain harvesting generally. So this is the first principle. Those who are above 18 years of age in your family, including your dada dadi, you can have a demat account and just use those accounts to build portfolio for the family. So that's the first big thing. If 4 members are there, up to 5 lakh, there is no tax, no other planning needed, further investment. So the second thing would be, and do it in the month of January, February. Don't wait for the 31st March, January. Okay, you can buy that share again or that mutual fund again. The second would be to again distribute the capital gain also if their family members are more and if you have a joint kind of an investment in future. Otherwise, just make sure that you invest that money in a residential house. If you want to buy a house, sell at that time of any land or any foreign equity where all the consideration has to be invested, not only the gain. Full consideration amount of foreign shares, those who have ESOP, etc., from an MNC especially, we recommend to sell at the time of buying a house. In that case, the tax becomes zero, or to the extent of you are investing in the house, it gets proportionately taxed. The second would be the buying bonds also if you are selling property, not shares. So if you are selling property, you can buy up to 50 lakh rupees bond per person. That's the limit. So again, you can distribute. The third thing is that if you are an NRI, so there are tedious compliances which are sometimes up to 30% of the consideration gets into the TDS. So better you transfer that property or gift that property to your Indian relative and then sell. That's easier way to kind of making taxes easier for your pocket or easier for your compliance also. So these are some basic things, and it could be other cases also, but you have to bring those on the table and take the advices case to case. Don't take everything in a thumb rule. Thumb rules are just to make your mindset, okay, I am close to this, but exactly what is my situation? Why to pay a penny extra, or why not to pay the taxes due are there? Because if you miss tax now, you will be paying higher price. Definitely. When you are attending a marriage, you are getting a notice. Just imagine. Or you are on a honeymoon and you are getting a notice. So keep the happy moment different from the stress moment by choosing the right things.
Completely, sir. Couldn't agree more. I think on that thought, just want to reiterate and some closing note for everybody who's joined. I think the session has been very, very valuable, both as a host and if I was just attending the session. I think I found a lot of new information that I've been working for some time. Even I didn't know. So thank you, Sudhir sir and Aastha, for sharing all of this information. I think taxes as a subject is a slightly tricky, slightly stressful subject by the nature of it, but it does not have to be like that. I think what really gravitated me towards one of the sections was that if we do it right, uh, we could potentially be looking at uh, making our future life much, much better, making taxes work for us versus us working for, to pay the Indian government more and more money in taxes, right? I think anybody who's joined in or people that I would highly recommend to do it the right way. Even if there's been some mistakes in the past, we have provisions. We have both the experts and the government giving us an opportunity to correct those mistakes and take guidance from the experts to file our taxes in a correct manner. So in case you have any questions on using Taxspanner or any questions around tax filing as well, right? Email them to me. My email ID I've just shared in the chat here, shobit@greytHR.com. I would connect you with the experts. I would help you in case you want to use Taxspanner application yourself or in your organization. I would love to make that connect possible. So thank you so much, everybody who joined, Sonia, Shashank, Aastha, and Sudhir sir. It's been a wonderful session. Happy tax filing and correct tax filing as well. Thank you so much.
Thank you, everyone. Good evening.
Thank
Thank
you.
Bye.